Well, we told you. Shotgun marriage, Swiss style. Again, this not surprising at all. Been paying attention to our show, to the radio show, to the podcast appearances I've been making. This is coming, and this is what happens. This is what happens when, again, you've got ridiculous regulations that don't really solve anything. You've got regulators that, quite frankly, don't give a damn, and we've got a too big to fail system. Many of these massive banks out there, they have, in essence, they've created a moat around themselves. And what I mean by a moat, it's called regulatory capture. It's kind of an agreement, wink, wink, nod, nod agreement between big banks and the authorities that, if things get out of control, we're going to need you to step in and help out here and there. And again, let's be honest. I mean, the executives at these companies become amazingly wealthy. Stock grants, a myriad of other ways. They just play along. If you think that Credit Suisse would have just said, hey, you know what? We're a good value here. Let's call up UBS and let's sell ourselves. Maybe they tried. But do you think UBS would have even picked up the phone? You take a look at the headlines over the past several years when it comes to Credit Suisse. This is a bank that can't shoot straight. At one misstep, one problem after another. Do you think if it wasn't the Swiss government putting pressure on UBS saying, listen, you need to do this and you need to do it now? It's the only reason why. This is not capitalism by any stretch of the imagination. This is crony crap. This is crony nonsense. This is, again, too big to fail, failing again. Yeah, last week on the program, I kind of taking a trip down memory lane. Solve the problem? I can solve it. Go back to Glass-Steagall. Okay, you're a commercial bank, you're a commercial bank. You're an investment bank, you're an investment bank. Break all of these banks up. Don't allow them to engage in this type of risky behavior. Oh, I know the banks will be a lot smaller, and the people in charge, obviously not as much in regards to revenues, aren't going to be making as much. And boy, oh boy, traditional commercial banking sure is boring. No, I got to hand out toasters. Yeah, that's fine, but it worked. It worked. We wouldn't run into these problems. And it's not about solving the problem. So we got the Credit Suisse bailout. I don't know what other ones might be coming down the pike here in the United States. First Republic stock continues to drop, and maybe we'll get into that a little bit later. But I want to talk about the blame game because, again, everybody's pointing fingers. Geez, how come the San Francisco Fed didn't spot this? Again, I'm not a stock. I don't cover in certain companies in an intensive manner. That's not what I do. But if I were to take a look at Silicon Valley Bank's books, again, I would have said, get the hell out of here. It doesn't take much. I mean, again, where were all of these genius analysts at all of these big firms? I can tell you what happened. Okay, they're not going to tell you. With Silicon Valley Bank and their buddies with all of these startup companies. Again, this goes back to the same crap that took place back in the 1990s. All of these big investment banks, do you think that they wanted to put a strong sell on Silicon Valley Bank? Yeah, I would love to see. I mean, they probably know better nowadays. They got caught back in the 1990s putting stuff on paper, sending out emails. Don't tell me that those banking analysts at Goldman Sachs, Morgan Stanley, the whole lot of them didn't know that Silicon Valley Bank was dog shit based upon the paper that it had. It didn't matter. Didn't matter because all of these investment banks wanted a cozy relationship with Silicon Valley Bank because they wanted to take public all their deals, all their startups after they laddered them up. Big money in fees taking companies public. Now, if you put a sell recommendation, on Silicon Valley Bank, you think that they're going to come? Say Morgan Stanley does it. You think they're going to look to Morgan Stanley? They're going to advise their clients to use Morgan Stanley as an underwriter? Hell no. Geez, I remember back in the day, I'm trying to remember the players that were involved. It was Citigroup at the time back in the 1990s. Changed its recommendation, if I'm not mistaken, on AT&T. AT&T, and it was Michael Armstrong was in charge at the time. Again, I've written about it. I should probably look it up. Again, I'll make a long story short. They changed the recommendation on AT&T. Well, one of the reasons is that the kids of the people at I forget, Citigroup wanted to get into a certain preschool in Manhattan, the 92nd Street Y. Very, very difficult to get into. And I guess the people over at AT&T that can make a few phone calls can make that happen. That's the type of crap goes on. Oh, again, if you don't believe me, look it up. Look it up. It all happens. Do you think that any of these investment banks want to have their stock analysts putting a sell recommendation, going after Silicon Valley Bank, knowing all of the companies that it has in the pipeline in the hopes that they were going to garner massive investment banking fees? Come on, man. Come on. Give me a break. Don't tell me that they didn't know. Anyway, you got Elizabeth Warren now. Again, this is rich. Hey, you got Pocahontas out there. Oh, it's the Fed and all these problems and lack of regulation. Need more regulation. If there's more regulation, this wouldn't happen. No, if there was actually regulators doing their job, this wouldn't have happened. If the big brokerage firms had warned everybody about what was going on at Silicon Valley Bank, this might not have happened. But what also it might not have happened, Elizabeth, is the fact that you and your minions signed off on trillions of dollars in nonsensical spending. Trillions of dollars in nonsensical spending from the Biden administration. That was over the top. Now, again, we told you, okay? To think that the Fed is independent, that is the biggest bunch of bullshit going. Okay? Fed's not independent. All right? If the Fed has to look at what Washington, D.C. is doing, and if you don't think the Fed is looking at, oh my God, holy crap, look at all of the spending that they're going to engage in. They knew it was inflationary. But again, they also knew, geez, if we raise rates right now, that's going to raise the ticket price on all this, which they should have done. They would have come under fire by Democrats as being mean-spirited and awful and taking food out of the mouths of minorities and kids and women and children. You know, the usual BS. And again, it would have cost, obviously, the cost to borrow money goes up and costs the taxpayer more money, as it's done, as it has been. Rates are not high. Rates have somewhat normalized. If you think that we wouldn't have had a strong economy with rates where they are for the past 15 years, we would have. Good companies adjust. We wouldn't have had as much BS crap out there. Right? You know, again, it's numbers. Wait a second, money's not for free. Sorry, we can't float your company for the next 30 years based on $1 and a dream in the hopes that you might make it because you have no business plan. All of that stuff would have gone away. So you make war on Powell Again, there's stories here talking about, oh, geez, maybe, or is it here? Maybe we should get rid of them. U.S. needs, and here it is. Kevin Warsh, Walsman, U.S. needs an economic regime change. Listen, okay, I didn't buy into the transitory nonsense, and anybody with half a brain didn't buy into the transitory nonsense. Again, the idea, and it's just the crap that the people in Washington, D.C. put off, is that they're somehow independent. What a load of bunk. Hey, I'm even looking into some of the stuff at Silicon Valley. You know that they allocated $5 billion for green BS? Oh, yeah. Yeah. It's to make them look good. And then again, has anybody put a microphone in front of Mary Daly? Oh, yes, big time woke San Francisco, head of the San Francisco Fed. Anybody stick a microphone in front of her? This happened on her watch. I look at these things and I'm saying to myself, you've got one job. You've got one freaking job and you can't get it right. Should have been fired yesterday. You can't do your job. No, your job is not making sure there's enough alphabet people on a freaking board. It has nothing to do with that. Your job is to make sure that the banks that you oversee are doing the right thing, are safe, that are putting the assets that they need to have in order to cover depositors into investments that are liquid, that they won't have to sell at a massive loss if interest rates change direction. Yet Mary Daly didn't do that. You think Mary Daly's going to lose her job? Hell no. Hell no. She's woke. She's part of the big club that you and I are not in. They never lose their job. And if she does lose her job, she'll be a professor teaching kids the wrong thing at some university somewhere. I mean, this people, my friends, this is the reality. This is the reality on the ground. Federal Reserve actually saw this, sounded the alarm about Silicon Valley Bank's risk management back in 2019. They warned everybody back in 2019. Where'd that report go? Maybe the circular file. I don't know. They may throw it in the garbage. Oh, no. They're buddies with Pelosi and Gavin Newsom and the whole woke crowd. Leave those guys alone. Again, same thing with Bernie Madoff. It's nothing new here. Again, it was a story, again, echoing what I've been saying here. Silicon Valley, a boom era feels like it's ending. Good. I'm being honest, okay? You got some underwear gnome business, and you know who you are. I got a great idea. I'm going to do this. Okay, what's your business plan? I don't know. Question mark. What's your third-party business plan? Profit. Okay, until you get the middle worked out, okay, go flip a burger somewhere, my friend. Go, figure out how, go work. It'd be great for you. Great for all you startup people to actually see how a successful business works. Go work at a restaurant. Go work at a Starbucks. See how well-run machines, see how they run their businesses. See what makes them successful, because you don't know. And guess what? Money ain't cheap anymore. And I'm being honest with you. I don't give a damn. Go under. Oh, these people, the startups going to go out. Go get a real job, because what you had is not a real job. If you're not working at a business that makes money, you're not working at a real business. You have no prospects. You have no business plan. Goodbye. I want to see money flow to companies that actually deserve it, that actually make sense. Anyway, again, how over the past few decades, I get this question a lot. How have we managed to avoid stepping in dog poop for 3 decades? We live by we have certain principles that the things that we teach when it comes to portfolio management, they don't change. You know, when everybody was trying to rewrite the script back in the 1990s, you know, it was a part of the taglines, earnings don't matter anymore. It's a new paradigm. We're like, they're always going to matter. And it's going to always come down to certain things and proper diversification and balancing out portfolios and understanding risk. We don't care what the powers that be are telling you. We just don't get involved. We don't get involved in any of that crap. And this is why we're able to do well, no matter what the markets are doing. When I know there's a banking crisis, if you're smart, you'll be fine. WatchDog on WallStreet.com.